Ladies and gentlemen, today we are witnessing one of the most dramatic moments on the Australian financial market. In just a matter of hours, more than $20 billion was wiped from CSL's market value, shaking investor confidence and raising serious questions about the future of both the company and the biotech sector as a whole. How did this happen? Why did it hit so hard? And what does it mean for the wider economy? Let's break it down step by step. Number 1. The sudden $20 billion wipeout and investor shock, expanded approximately 600 words. The collapse of CSL's share price was so sharp and unexpected that it instantly made headlines across financial media. Within hours, the biotech giant lost over $20 billion in market value, creating panic among both large institutional investors and small shareholders. Many were caught completely off guard, as CSL has long been considered one of Australia's strongest and most reliable companies. The immediate cause of the plunge was weaker than expected profit guidance combined with broader market fears about slowing global demand for biotech products. Investors interpreted this as a red flag. If even a company as powerful as CSL is vulnerable, then the entire sector may be at risk. Panic selling followed, wiping billions from its capitalization almost overnight. Analysts noted that the scale of the wipeout was a direct result of CSL's huge presence on the Australian Stock Exchange, ASX. As one of the most valuable companies, any sharp movement in its shares instantly ripples through the broader market. This explains why the entire ASX was dragged down, with other biotech and healthcare stocks also suffering heavy losses. The shock was not only financial but also psychological. For years, CSL had been viewed as a safe haven, a company immune to the usual volatility of the market. Investors who relied on it for stability suddenly faced heavy losses, which eroded confidence in the idea that big is always safe. The global market context, expanded approximately 600 words. While CSL's internal issues triggered the fall, the broader global financial climate amplified it dramatically. Rising interest rates across major economies have put intense pressure on growth companies, especially in the biotech sector. Higher borrowing costs mean that research and expansion are now far more expensive, squeezing profit margins. In addition, global markets have been shaken by inflation fears, supply chain disruptions, and geopolitical tensions. These factors all contribute to investors becoming more risk-averse. In such a climate, even minor signs of weakness in a large company can lead to an outsized reaction. CSL, unfortunately, became the perfect target for this trend. Competition is another key factor. Biotech companies from the US, Europe, and Asia are aggressively expanding their reach, challenging CSL's dominance in markets it once controlled. Investors are increasingly concerned that CSL may be losing its competitive edge. Thus, the $20 billion loss cannot be seen in isolation. It reflects a wider pattern. The global economy is undergoing a reset, and companies once considered unshakable are suddenly facing pressure on multiple fronts. CSL's collapse is both a symptom and a warning. 3. Impact on investors, markets, and the economy, expanded approximately 600 words. The collapse of CSL's share price had immediate and painful consequences for investors. Large institutional funds, many of which hold CSL as a core part of their portfolios, saw their valuations drop sharply. Pension funds that rely on CSL's stability also faced sudden losses, raising concerns about the long-term security of retirement savings for ordinary Australians. On the broader market, CSL's fall dragged down the ASX, sending shockwaves through related sectors such as healthcare, pharmaceuticals, and even banking. The sudden hit to market confidence caused many investors to sell other assets, deepening the overall decline. The psychological impact was perhaps even greater. CSL had symbolized resilience and consistent growth for decades. Its sudden weakness undermined that narrative, leaving investors questioning which companies, if any, can truly be considered safe in today's volatile climate. For the Australian economy, the timing was particularly painful. With inflation, interest rate hikes, and slowing global demand already weighing on growth, the CSL crisis added another layer of uncertainty. It not only hit stock portfolios but also risked damaging Australia's reputation as a stable investment destination. Number 4. Future steps, government role, and analyst outlook. Looking forward, CSL faces critical decisions. The company will likely need to cut non-essential spending, focus only on its most promising research projects, and adopt much stricter financial discipline. Analysts believe that rebuilding investor trust will require a strong commitment to transparency, including detailed reports and regular investor briefings. Innovation remains a central challenge. If CSL slows its research pipeline too much, it risks losing ground to competitors. Partnerships with universities, startups, or even international biotech companies may become essential to maintain leadership. The Australian government also has a role to play. Biotech is a strategic industry, and CSL's crisis highlights the risks of over-reliance on just a few large players. Support measures such as tax incentives, subsidies, or research funding could help stabilize the sector and prevent further fallout. International credit rating agencies will also weigh in. A downgrade would intensify the pressure, while a positive outlook could help calm investor fears. Much depends on how quickly CSL can deliver results and prove it remains a global leader. Experts remain divided. Optimists argue that CSL's fundamentals are still strong and that the company will recover once markets stabilize. Pessimists, however, warn that without bold reforms, the company risks losing investor trust permanently. Ladies and gentlemen, the story of CSL is more than just a corporate crisis. It is a reminder of how fragile even the biggest companies can be when global conditions shift. $20 billion vanished in a single day, shaking investors and sparking doubts across the economy. But this is also a turning point. CSL can either adapt, reform, and rebuild its credibility, or risk being overtaken by more agile competitors. The company's future, and in many ways the reputation of the Australian market itself, depends on what happens in the coming months. This crisis is not only about losses. It is also about lessons, for businesses, governments, and investors. In today's unstable world, past success does not guarantee future security. What matters is the ability to adapt, to innovate, and to respond with speed and determination. CSL's path forward will show whether it can rise from this challenge stronger, or fade under the weight of its mistakes.